Hello, I'm Humphrey. Your bank statements are one of the best places to start a self-assessment return. They show the money in, the money out, and the dates. But a bank statement isn't a tax return, it's evidence. The work is turning it into figures. Can you use bank statements? Yes, but not by simply sending them to HMRC. Gov.uk says self-employed people must keep records of business income and expenses, and statements are one form of proof. You don't normally send them with the return, but you need them to work out profit or loss and show HMRC if asked. For a sole trader, the useful output isn't a PDF statement for April, it's records that answer 4 questions. What income did the business receive? What expenses were for the business? Which category does each belong in? And what are the totals for the tax year? Under MTD, a transaction needs a date, an amount and a tax category before it becomes a usable record, and MTD uses the same categories as self-assessment. A clean workflow has 4 steps. Collect the statements for the tax year, usually the 6th of April to the 5th of April, including any personal account you used for business. Convert them into CSV or Excel, 1 row per transaction. Separate business from personal, transfers, drawings, and personal spending aren't expenses. Then categorize and total the business transactions into the right self-assessment categories before you file. A converter can give you a tidy spreadsheet, useful especially if your bank only gives PDFs. But the spreadsheet still doesn't know whether a transaction is allowable, private, a transfer, a capital purchase or income. A payment to a supplier might be allowable, a transfer to your savings isn't. They look similar in Excel, but they don't mean the same thing on a return. The bank line is the clue, not the answer. Self-employed income goes on the self-employment pages of the return, known as SA103. Gov.uk lists SA103S and SA103F. The practical point is that your expenses need grouping into the right headings, not left as raw bank descriptions. That's why an HMRC-ready spreadsheet is slightly slippery. Somebody still has to turn tidy rows into the figures that belong on the return. Taxadoo starts with the same thing you already have, a bank statement. Upload a PDF or import a CSV, and it exports clean CSV, Excel or PDF records. But it doesn't stop at the spreadsheet. Taxadoo Convert has purpose-built parsers for real UK banks, then categorizes transactions into HMRC's SA103 categories, produces a trial balance, and puts the figures in front of our accounting team, who review and file your return with HMRC. A few traps to avoid. Don't count every outgoing as an expense. Personal spending, transfers and drawings need separating. Don't rely on the bank description alone, keep receipts and invoices for proof. Don't assume a PDF is enough. And don't leave categorization until January. The painful part isn't getting the statement, it's deciding what every line means. The bottom line, bank statements are a strong starting point, and converting them to CSV can save hours. But the return needs more than rows in a spreadsheet. It needs business transactions identified, expenses categorized, totals checked, and figures filed in the right place. A converter gives you the data, Taxadoo helps turn it into the return. Whether you just want a cleaner spreadsheet or the full self-assessment workflow, start with your statements at taxadoo.co.uk. And subscribe for more plain English tax tips from me, Humphrey.